prayers. Good evening, everybody. My name is Pedro Montome. I will be here throughout the program, but the moderator is also online. I'm the lead pastor of Foundation Truth Assembly, and we are the one putting this program together because we believe that it's important that we have appropriate knowledge of the tactics that is happening in our country. As some of you may be aware, or a lot of us are aware, the federal government recently brought to pass a new bill, a new tax law that is going to radically impact tax in our country. And we thought, as business owners, as employees, and as employers of labor, it's appropriate that you know what the new law says and how it's going to impact your business from 1st of January 2026. So we're just a few days away from when the new law will take effect. So we have a special guest in the house tonight. I'm not going to introduce him. I'll allow Mfon to introduce him. But it's important that if you have questions, please write your questions down, type your questions on the chat so that we can take all the questions. We are hoping that this will run for about an hour and a half. And I'm sure if we need to extend, maybe if Chime is kind enough to extend, we can. But this should run for an hour and a half, and we have you ask all the questions. Mfon, I don't know if you are there online. Over to you. I know you're out of the country, but please, I hand over to you now to do the introduction, and let's set the ball rolling. So welcome, everybody. I hope that this free service will become a source of blessing to you. Thank you so much, and please endeavor to mute your phone and don't disturb the rest of the audience so we can hear as much as possible and learn as much as you can. Thank you. You're welcome. Over to you, sir.
All right. Good evening, everyone, and thank you, Pastor P, for the introduction. What an epoch meeting that we have here today. We all know what is happening in the country as regarding the tax law that was recently promulgated, but will be implemented come January 1st. We have here with us Mr. Emeka Chime, an associate director with PwC Nigeria, who will be doing justice to this topic. And before we go ahead, I would like to quickly introduce him by reading his profile so that you have an idea his expertise and why he was chosen to do justice to this topic. Mr. Emeka is an associate director with PwC. He has about 15 years of work experience providing a wide range of tax services to an array of PwC clients. He spent about 3 years with the PwC Houston office, Texas, where he provided tax advisory services to private companies in the US with a focus on companies in the oil and gas sector. Mr. Emeka has excellent understanding of working of tax as it relates to companies in the consumer services, downstream oil and gas, financial services, and digital services sector. He has led various projects covering tax structuring, tax due diligence, and merger and acquisition advisory, tax and regulatory compliance, and advisory compliance checks and audit, and business organization. He also provides tax and unit of PwC Nigeria, and has authored a number of tax publications. He is a fellow of the Hello, can you still hear me?
Ahead. You said he's a fellow of what, sir?
Hello, am I audible?
Yes, go ahead. He's a fellow of...
Okay. He's a fellow of the Associate of Chartered Certified Accountants and a member of the Chartered Institute of Taxation of Nigeria. Please help me welcome Mr. Emeka, who will be making a presentation for about 45 minutes. And thereafter, I know that you have a lot of questions to ask. Please, if you have questions, please write them down, put them on the group chat. We will also give opportunities to those that are bold enough to ask him directly. So please, I'd like you to mute your mic as Mr. Emeka comes on board to make his presentation. Mr. Emeka, you can take over the screen and make your presentation. Thank you very much.
Thank you so much, and good evening, everybody. I will be presenting some slides, and hopefully we can all follow through. It's my deepest honor and pleasure to be here. And thank you once again. So I'll be presenting my screen now. So please let me know when you can see my screen.
We are still seeing your fine face with your beard. Well, not the screen yet.
Yeah, my screen is coming up now.
Please, I'm in a meeting.
It's coming up, Mr. Emeka.
Yeah, so can you see the whole? I want to know, can you see the whole screen?
Yes, we can see your screen now.
Okay. And is it moving? It's moving now, right?
Yes, it is.
Okay. All right. So good evening, everybody. Once again, thank you. Thank you for the introduction. It's something that we, as part of also my own personal mandates, I think it's good to, spread education around the tax reforms because one, there's been a lot of misinformation in the public space, but also to help us as, citizens know what our obligations will be and, be able to play a responsible role. So I'm going to start very quickly with an overview. So, as was introduced, the tax reforms were signed earlier in the year, right? Why were they signed? What was the reason that the laws were signed? So, in Nigeria, if you want to know about different kinds of taxes, you need to go to different sources. So, they were not all in one place. If you want to know how companies pay taxes, you need to look for some particular set of laws. If you want to know how individuals pay taxes, you need to look for another set of laws. If you want to know how, VAT and all those things. So they were scattered all over the place. So one of the objectives of this is to harmonize all of this together in one source, right? Another thing is there's been multiplicity of taxes. It used to be that the government will just wake up and say, oh, we need to fund ABC, and they will just introduce a new tax, right? So for example, a regular company in Nigeria today will pay the major tax. The major tax for companies is called the company's income tax. But on top of that, government at some point in the 90s woke up and said, how do we fund our educational sector? Right? So they woke up and introduced something called the education tax, or some people call it the tertiary education tax, and they imposed it on companies. On top of that, the IT space was booming, and government said, how do we fund the IT space? They woke up and set up IT levy. In fact, apart from the IT levy, they set up another similar one called the NASENI levy, both of them, for IT-oriented activities. So they woke up and said, our police system is not effectively funded. And they set up something called Police Trust Fund and they imposed it on companies. So you can see there's just been this multiplicity. And it just appears that companies, especially the ones that are compliant, are the ones that keep taking the brunt. When government needs money, they just wake up and impose something. In fact, at some point, they were thinking about, funding or providing better, funding for the National Youth Service Corps, the NYSC, and they were actually considering introducing an NYSC levy as well. So you can just see that all of this, just keeps on piling up. So one of the reasons for this law is to harmonize all of this, to say, look, we don't need to just keep waking up and introducing additional taxes for the same set of people to continue to pay. So how do we think through what our needs are and harmonize all of this? Another thing is the way the laws are written. Many of our tax laws are old. Many of them are not in line with economic realities. We have one tax law, for example, that has been there since 1939, colonial era, right? We also have tax laws that do not envisage the digital economy. So these laws came on board to try to say, look, let's make it in line with what we're seeing now in 2025. One example is also the way the laws are written. If you read many of our existing laws, you see a lot of legal writing or legalese, like they like to call it, that only the lawyers can understand. In as much as be that as is may, thou may pay, all those kind of things. Well, not exactly, but I'm just giving that as an example. But the laws now are written in simple English so that the ordinary man can read and understand. In fact, there's a drive to translating the laws from the simple English that it's already written in to, Igbo, Yoruba, Hausa, and even Pidgin, so that it's reachable by the ordinary populace. So because of all of this, President Tinubu on the 26th of June signed the tax reforms into law. So when a bill is in the works, it is draft and it's called a bill. But when it is signed, it becomes a law or an act. So the tax reform bills were signed into law on the 26th of January. So they are no longer bills, okay? They are now laws. It's just that the effective date of those laws was pushed forward. So even though they were signed on the 26th of January, they are going to start becoming effective from the 1st of even though they were signed on the 26th of June 2025, they are going to start becoming effective on the 1st of January 2026, and like I said, there will be the reasons will be to consolidate our tax system, harmonize and enhance equity and digitize our tax process. Okay. So effectively from the 1st of January next year, Nigeria no longer has multiple tax laws. So all these laws, companies income tax, capital gains tax, value added tax, police trust fund, all these things that you can see on your screen, all gone. We no longer have all of them. We will now have how many? Four main tax laws. And that's what you can see on your screen. So we'll have to the top left-hand corner of your screen, the Nigeria Tax Act. Now, that will be the principal or the major tax law, Nigeria Tax Act. So anytime you hear people talking about the new law, that's mainly what they're talking about, Nigeria Tax Act. But there will be other supporting laws. The other one to the top right-hand corner of your screen is the Nigeria Tax Administration Act. To the bottom left-hand corner, Nigeria Revenue Service Act, and to the bottom right-hand corner, Joint Revenue Board Establishment Act. Now, I won't bore you with all the intricacies, but just know that the main law is the one on your top left, Nigeria Tax Act. Some people call it NTA. Whichever one you choose to call it, it's fine, but that's the main tax law that we'll have. What does the NTA do? It brings together all those laws that you saw. We won't have all of them, we'll just have one, NTA. So that's where it is. If you look at the top right, Nigeria Tax Administration Act, they've brought together all the processes. So this is not really the tax that you should pay. It is the processes involved in paying the tax. So all the filing that you need to do, all the penalties that apply if you don't pay, the procedures, all of them have been brought together under the Nigeria Tax Administration Act. Because why should the penalty for not paying VAT, for example, be different from the penalty for not paying personal income tax? Is the fact is that you didn't pay taxes, so let the penalty be uniform. So that was part of the idea of consolidating all those processes and procedures in the Nigeria Tax Administration Act. Well, I hate this. Okay, I thought that was a question. Please, can we have you on mute if it's not a question? Thank you. All right, so I'll move on. So the one to the bottom left, Nigeria Revenue Service Act, that is what the FIRS, I don't know how many of us know the FIRS, Federal Inland Revenue Service. They will no longer be called the Federal Inland Revenue Service. They will now be called the Nigeria Revenue Service because the government thought these people are not collecting tax only for the federal government. So why should we call them Federal Inland Revenue Service. They are collecting taxes in some cases for the whole of Nigeria. So they should be Nigeria Revenue Service. So that's what the Nigeria Revenue Service Establishment Act has done. And the other one, the Joint Revenue Board Establishment Act, it establishes something called the Joint Revenue Board that just helps the coordination. I'm not going to go into too much details, okay? Let me tell you that the main or objective long term of all of this is to bring together all the revenue collecting responsibilities of government into the hands of the FIRS, soon to be called NRS, Nigeria Revenue Service. We shouldn't have a situation where there's customs and there is tax authorities, right? Because if you give government agencies responsibility to do other things, but also to collect revenue, they will leave those other responsibilities and focus on revenue. Okay? So Nigeria is one of the only countries where you have customs separate from the tax collecting agency. In many other countries, is one and the same. In Ghana, you have the Ghana Revenue Authority. South Africa, the same. Kenya, the same. But in Nigeria, we still have the customs. And even though that was one of the objectives, it hasn't been achieved yet. But hopefully, the long-term plan is that at some point, we will not have customs or other revenue collecting agencies, different from the FIRS or NRS. Let me say NRS, and I hope that you all follow. So that's one of the things that they will do in the long term. Okay, before we start talking about what has changed, I always like to talk about what has not changed first, because people just think everything has changed. No, there's some things that remain the same. So let's look at what will not change before we actually start talking about what has changed. So in the sense of what will not change, companies will continue to pay tax at 30%. So the companies that are tax paying will continue to pay tax at 30%. Okay? So that rate is what we have now. That rate is what we'll have from the 1st of January next year. So that one is not changing. VAT will continue to be 7.5%. Many people think, oh, VAT will go up. No, the VAT rate the standard VAT rate will remain 7.5%. Okay, so these two are not changing. All right, let's start talking about what has changed. So for a company, what has changed for a company? Today, if you set up a company and you go to CAC, I don't know how many of us know the CAC, it's the Corporate Affairs Commission, and you go there and you say, oh, I want to set up my company, Emeka Limited. They will give you, a certificate and all of that. That is what makes you a Nigerian company, that you are registered with the CAC. Okay? So you set up a company in Nigeria, you're a Nigerian company. But from the 1st of January next year, it's not just because you're registered with the CAC that makes you a Nigerian company. You can be a Nigerian company even if you are a foreign registered company, but your management or your directors are in Nigeria, then you're a Nigerian company. I hope we're following. So even if you're a foreign company, so far your management or your directors are in Nigeria, then you are a Nigerian company. So a Nigerian company will no longer just be a CAC registered company, but also a foreign company that has its leadership in Nigeria. And what's the implication of that? It means that you would pay taxes on your worldwide profits because your board or your management is in Nigeria. Okay? Now, let me give you an example, because for some of us, it might be abstract. So think about banks, oil and gas companies, many companies that started in Nigeria but then expand. So maybe they now go and set up company in Ghana or company in South Africa or all these other places. But the people that are making the decisions, the people that drive the business are still in Nigeria. That foreign company is a Nigerian company, and all the profits that foreign company is making in that country, they'll be required to pay taxes in Nigeria. Okay? So that's one of the things that they've done to expand what it means to be a Nigerian company. But the good thing that they've done is to say, look, even though you're a Nigerian company because your leadership is in Nigeria, we will allow you to deduct the taxes that you've paid outside Nigeria. So you get a credit, that's what they call it technically, for any tax that you suffer in that foreign country. Okay, they've given an exemption for small companies. So in Nigeria, if you set up a company and you are a small company, you don't pay taxes. So you might ask, what is a small company? A small company is a company that your revenue is not more than 50 million naira per annum. And your assets are not more than 250 million naira. So those conditions go together. So if you set up a company today and you're doing business, and in the whole of 2025, all the revenue that you generated is 49,999,000. And we also check your assets, and your assets are not more than 250 million, you're not paying taxes. Okay? That is something that is one of the changes that was well received by the public, because one of the objectives of this tax law was to not tax the small businesses or to not tax the poor and tax the rich. So that's why they've exempted companies that are small, and say, look, if you don't meet this limit, you don't pay tax. So I was doing a presentation somewhere, and some businessmen were telling me, do you mean that if my revenue is not more than 50 million, I won't pay taxes? And I said, yes, sir, you won't pay taxes. And they said, my revenue will never go above 50 million. And I laughed because, this is Nigeria. It means that some businessmen, when one company is trying to make revenue and is going above 50 million, they'll set up another company. When that company is doing business and is trying to make revenue and is trying to meet that threshold, they'll set up another company. So these are some of the challenges, but the main idea is to protect small companies. So I'm not saying that you should just keep fragmenting your operations, but at least it just gives the idea or the outlook of government is to protect the vulnerable. I was and this just also brings to mind one of the things I like to say around this. If you look at it, the exemption is for companies, not small businesses. Okay. So it means that if you have a business and the business is, in Nigeria, we call it business name or enterprises or, like sole proprietorship or partnership, all those things that are not companies. So you are Emeka Enterprises or Emeka and Sons, chartered accountants. So far you are not Emeka Limited. This threshold does not apply to you. What does it mean? It means that you can be a small business and you'll be paying taxes. But if you formalize and register as a company, then you will not pay taxes unless you exceed this 50 million in revenue, like I mentioned. So the idea is really to get people to formalize so that they have more data. When you are formalized, the CAC has your information, they can get it if they want it. So it's to encourage businesses to formalize so that when they become big companies and they grow, they can now tax them. If you remain an individual, if you remain in the informal sector without formalizing, this exemption does not apply. Okay? So I hope it's clear, and I'll move on to the next point. All of these taxes that you can see on the left side of your screen no longer exist from next year. So we're not going to have tertiary education tax. We're not going to have Naseni levy. We won't have IT levy or information technology levy. We'll also not have police trust fund levy. Why? All of this will be replaced by something called development levy, and it is 4%. That is it. So this is part of what the government said that they were going to do to actually make it simpler for compliance for companies. So from next year, if you have a company, the company will just pay two taxes: company's income tax, 30%, and development levy, 4%. No more Naseni, police trust fund, all of that. No. So all of these have been combined into development levy. There is a 15% minimum tax on profits for certain categories of companies. So today, if a company is loss-making, they will still pay something called minimum tax. I don't want to overstretch it, but if you do business and you make very small profits, or you don't even make profits, you actually make losses, today you pay taxes as a company at, there's a minimum tax that you pay on your revenue. They will tax it on your revenue. What they've done now is to say, look, let us not tax on revenue, because if you tax on revenue, it's actually bad, because if they are loss making, then you're actually, taxing them on their capital, right? So there'll be, they've changed all of that, and they've said we're going to have a minimum tax, but it will be taxed on your profits, 15% on your profits. So from next year, companies that meet these thresholds that you can see on your screen cannot pay lower than 15% in Nigeria. Then there's something that they've tried to do. Remember, like I said, normally, we shouldn't have different revenue collecting agencies. We shouldn't have the customs separate from the FIRS, because think about it. What should be the aim of customs normally? Customs should be for border protection. It should be for trade facilitation, to encourage trade between Nigeria and other countries. But because you've given them the responsibility to also collect customs duties, that's what they're focusing on, So it's something that this is still in the works, but long-term goal is to make sure or try to bring the customs also under the ambit of the revenue of the tax revenue collecting agency. But before that to happen, one of the things that they've done is to say, if you import something, if you import an equipment, for example, and you do not pay the full VAT, then when you're filing your tax return, you cannot get the full deduction. I'll spare you all the technical details. Just know that what this means is they want to try to make you, they want to try to align how you deal with the customs with how you deal with the FIRS. So if you import something, make sure you pay your full import taxes and VAT. Otherwise, you won't be able to get your full tax deduction when you're filing your tax returns with the tax authorities. Okay? There is something that is called a fossil fuel surcharge. I don't know if anybody here has heard about it, but one of the things the government is also trying to do is to say, on fossil fuel, what do we mean by fossil fuel? Petrol, diesel, all the petrochemicals, really, that they will soon introduce a 5% surcharge. So when I put this up, I like to be careful. This is not starting in January, but they will soon introduce it. What is happening in January is that the minister will have the powers to introduce it. So it's not like the tax is actually coming in January, but from January, the minister can decide when to introduce it. So when this came out, there was a lot of public pushback to say, why are you taxing us? Oh, you removed subsidy. Now you're even putting tax on the fuel. So they said, look, we're not actually introducing this in January, but it might come up at some point. So what are they trying to do? They're trying to get some revenue from the purchase of fossil fuel. Simple and short. So I'm not going to spend too much time on this. Just know that at some point in future, at the purchase of fossil fuel, there might be an additional 5% surcharge. Now, this tax is not going to apply on kerosene. They've exempted kerosene. They've also exempted cooking gas, right? They've also exempted renewable are not fossil fuel, but they exempted them. So they exempted kerosene, cooking gas, and CNG, and renewable. So those things will not be subject to this fossil fuel, right? Because those things are things that are basic, that are consumed or used by the majority of the populace, of the vulnerable in the society. So that's why they exempted, those kerosene and, cooking gas and all those things. But largely the others, when this is introduced, they will need they will need to pay an additional 5%. The banks have been instructed to report transactions to the tax authorities. If you are an individual and you do monthly transactions above 50 million, the banks will just take your data and go and give FIRS. They say, oh, Mr. A, all his transactions in November 2025, they are 50 million and above. So FIRS will now use that data and come and start asking you questions. Okay? If you're a company, the banks have been instructed to do the same. If your monthly transactions are more than 250 million, okay? So we're not saying that the tax authorities will tax you. We're saying that they will give the information to the tax authorities and the tax authorities will now ask questions. So we hope that we're able to justify, the reason for those transactions. Because if there's no substance, if you have, activities that you've not been reporting in your tax return, then they can now use this to get that knowledge to tax you. Okay, so we now need to be very mindful. Some of us have businesses, but we run some of the transactions through our personal accounts. It can trigger this. Some of us have personal accounts, but we run business funds through the personal accounts. It can also trigger this. So this is something that now, it's something that then makes sure that we need to structure our affairs properly and also make sure that we're actually filing proper tax returns, so that when this happens and the tax authorities use that information to assess us, we are not paying penalties and interest, because that will make it worse. If you pay proactively by yourself, there will be no penalties and interest. But if you wait for this to be picked up, then there will be penalties and interest, and it can get significant. One of the things the tax authorities has tried to start doing is something called electronic invoicing or e-invoicing. So they don't want many companies to be issuing physical invoices. Oh, you bought something from me, bought 500 cartons of, item A, paid 500,000, paper invoice. No. From January, certain companies are required to issue their invoices electronically. How? The FIRS has introduced a system where they will now have direct accesses to the business software. So they can now see all the invoices real time and they can have full information for tax. So you can see the tax authorities are not playing. They're actually trying to ensure that it gets as much intelligence as possible. Let's come to individuals. If you're an individual, from the 1st of January next year, even if you jackpot, even if you live in Nigeria, you can still be a Nigerian resident. And what does being a Nigerian resident mean? It means that you pay taxes on the income that you earn, even in that foreign country. You should pay it in Nigeria. Okay? So it's not everybody, it's the ones that meet the residency tests. What is the residency test? If you jackpot to Canada today, but you have a house in Nigeria that is permanently available for your use, okay? Or you have, they call it substantive or substantial family ties, So let's say you jackpot, but your wife and your children are in Nigeria. You have substantial family ties to Nigeria. Or you jackpot, but you have a domicile in Nigeria. It means that you are still resident in Nigeria. And what will the tax authorities do? They will ask you to pay taxes even on your Canadian income to Nigeria. So that's one of the things we need to make sure that because we didn't have this before, but we now have it. It's called residency rules. You can leave Nigeria, but still be resident in Nigeria if you meet any of these conditions. Okay? But one of the things they've tried to do is to say any tax that you pay in Canada, we will give you a credit to allow you to deduct it against that tax that you are now supposed to pay in Nigeria. So you find out that by and large, you may not have to pay more taxes in Nigeria, especially if you're paying taxes on that income in the foreign country. Okay. So Canada's tax rate, if it's like maybe you jump out to Dubai, Qatar, UAE, somewhere that doesn't pay taxes, and you still have family in Nigeria, so you're a resident, or you still have a house permanently available for your use in Nigeria, and you're a resident, okay? Because those countries don't tax that income, because they have a tax-free regime there, it means that you pay taxes on the income that you earn from Dubai, you pay it in Nigeria. So that's the reason, or that's the implication of the residency rule, okay? Now, let's look at the rates. Because one of the things, apart from making you resident, even when you drop out, another thing they've done is to change the rates. So today, as we speak, what is the highest for individuals? If you look at the left side of your screen, you see what our current rates are. So if you earn 300,000 naira per annum, you pay personal income tax at 7%. If you earn for the next 300,000, you pay at 11. The next 500, you pay at 15. Going on and on and on until above 3.2 million, you pay at 24%. So this is per annum, right? What does this mean? It means that anybody that earns above 3.2 million, you pay taxes at 24% in Nigeria. But there's some relief in there, that they'll give you. It's confusing. It's not straightforward because 3.2 million is not a high amount. Plus, there's one relief. So government said, you know what? Let's do away with this way of calculating personal income tax. So they now introduced the one that you can see on your right. So from the 1st of January, the first 800,000 is exempt. The next 2.2 million is taxed at 15%. The next 9 million is taxed at 18%, all the way to above 50 million, 25%. So you can see that these numbers are more sensible. They are more in line with what we should expect in 2025. The ones on the left are old numbers, right? So the one on your right is that's what they've done. Some people have been complaining, oh, but why is the tax rate so high? If you really look at it, our highest tax rate is going to be 25%. In some countries, their tax rates 40 something, 30 something. So Nigerian government is saying ours is not even really that high. And even that 25 is for people that do 50 million and above per annum. If you don't do 50 million, your tax rate will be lower. Okay. So there's all of that in there. Some people keep asking the question, this 800,000, why 800,000 zero? 800,000 was gotten from our minimum wage. So the minimum wage in Nigeria currently is about 70, 75,000, depending on who you ask, right? If you multiply 70,000 by 12, that's for 1 year, you get about 840,000. So that's what they tried to do, to say, oh, if you're earning minimum wage, you shouldn't pay tax as an individual. But above minimum wage, you see that the tax rate continues to rise, 15%, 18, 21. But minimum wage earners will not pay tax in Nigeria. In some states, this is a good news. I've gone to certain states, Kebbi State. Many of their civil servants, many of the people that work in hospitals, hotels, schools, filling stations, all of that, many of them don't earn more than 70,000 per month. So many of them are not going to pay tax. Okay. But yes, if you earn higher than that, then you can see your tax rates there. Okay. Now, on top of that, and what I did here was to try to show you how this tax would result in what your take home is. So just follow me, please. On the left side of this table, you see your annual gross income. So if you earn 1 million per annum today, under the current law, you pay 44,000. Okay? But when the new law comes, you pay 0. You pay zero. Why? Because there's an 800,000 exemption, and there's another exemption. I'll talk about it in a few minutes. There's another exemption. So it means that you would actually be better off from January next year. And that's why you can see savings 44,000 in green, you know. So if your annual gross income is 5 million, that's the next line. Today you'll be paying 603,000. Under the new law, you pay 559,000. Sorry, there's some background noise. Can we go on mute, please? Yes. So if your annual gross income is 5 million, today you'll be paying 603,000. From next year, you pay 559,000. So someone whose annual gross income is also 5 million will be better off from January. In fact, you'll be better off for annual incomes up to 20 million, as you can see on your screen. That's line 5. For annual income of 20 million, today your tax is 3.180. From next year, your tax will be 3.147. So you're actually going to be doing better next year. But when your gross income exceeds 20 million, that's when you start paying more under the new law from next year. Okay? So I just thought to put this table so that some people may understand the impact of this on their pockets. Remember, these rates apply to individuals and to enterprises, business name, and the rest. If you are a company, you will not even pay tax at all until you pass 50 million. Remember, we mentioned that in the beginning. Now, there's something that they've called rent relief. Do you know what they want to do? The government wants to get information about your landlord. Why? They've noticed that many landlords don't pay taxes. They will collect rent from their tenants, they'll take all the rent, and they are not paying taxes on it. If the landlords were renting to companies, that would have been a different ball game, because companies would deduct something called withholding tax. I'm not going to go into the details. But when landlords rent to individuals like you and I, we'll pay the landlords the full rent, and most times the landlords don't pay taxes on that rent. So what's the government trying to smartly do? They are saying, if you give me details of your landlord, tell me your landlord's name, tell me the address, and show me evidence that you paid rent, we will give you an additional relief of 20% of your rent, up to a maximum of 500,000 naira. So what does that mean? It means that if in my building, I go and tell the government when I'm filing my return that this is my landlord, this is his details, when I'm paying my own tax, I will get a relief of up to 500,000 naira. So they want to use it to get information about the landlord so that they can go and tax them, but they also want you to be able to get that relief. So that's one of the things that they've done, and it's hopefully something that we'll see how it works. So as you can see on your screen, all of us that go online posting, oh, money in our water, or billings and lifestyle. From next year, the government is going to actively look at social media, because they are gathering information from different places. So social media, remember, the banks are also going to be submitting transaction details. Social media and all of this will be used as an avenue to also assess the tax-paying abilities of individuals, okay? Because what the government has thought about it and said, what will individuals use money for? You can only use money for saving, you can use money to spend, and you can use money to invest. So what they're trying to do is to tie those three outlets and bring them together to say, okay, the savings, okay, we're getting information from bank anyway. Investments, they are going to look at all of the stock markets, the Nigeria Stock Exchange, to also be giving them information, or the land bureau, the people that record land sales and all those things, to also give them information. And then hopefully looking at social media for other expenditure. If you post that you have a car, most times if you post that you have a Range Rover, people that have Range Rovers today, it's very likely that the Range Rover is not their only car, because you have to have a small Toyota for your normal running around and a Range Rover for your prestigious movement. They are putting together all of that information. So there'll be huge focus on lifestyle sharing from next year as well. And finally, just to talk about penalties, many of the penalties for non-compliance has increased. Today, if you look at our tax laws, you see a lot of penalties, 5,000 naira, 10,000 naira. From next year, you won't see small penalties like that. The lowest penalty you see is 50,000 naira. So it means that compliance is now more important as an individual and as a business name, also as a company. Okay. So that is very critical. There's a huge focus on penalties for non-compliance. So in summary, what should you do? Please take action on the tax reform. It's a good thing that we're here to hear and even know what is in there. I've highly summarized this. There are some more details, but from what we know, we need to begin to structure properly. If I'm a business and I know that I want to be business sustainable, I would rather go and set up as a company so that I will. Okay, can you go on mute, please? Someone,
Please go ahead.
okay, if I'm a business and I want to continue to operate sustainably, I would rather go and set up as a company so that I can take advantage of the 50 million threshold, for not paying taxes. So some of those things, and then keeping proper records, ensuring your financial flows in your banks are well thought through, because those are the things that can be a difference between winning and losing from next year. Thank you very much.
Thank you so very much. Are you here?
Yes, I'm here.
Please go
Wow,
ahead.
what a wonderful session. I'm so excited you were blessed by this information. As it is always said, ignorance is not an excuse. I know that this information that we have gathered here today will make us better informed, better prepared towards what is coming. But most importantly is the fact that we want to be better citizens of this country. We want to generate more funds to be able to drive development and infrastructural growth. And we can't do this without compliance. We can't do this without your support. Mr. Emeka, thank you so much for that wonderful and detailed presentation. I believe a lot of people have a lot of questions to ask. I was literally jotting down, chatting with my wife, and I'm serious. I am super blessed I attended this meeting. So if you have questions, drop it on the group chat. I know that there are 1 or 2 questions on the group chat as I speak, and I'm going to read them out, Mr. Emeka. So permit me to read 1 or 2 questions while I give you the opportunity to answer them.
Okay, sure.
So the first question for me, or from me, it says, please, what does the new tax regime say about charity giving, tithe, offering, zakat, and donations to charity? Are they tax deductible? Mr. Emeka, did you hear that question?
Very good question. Yes, I heard you. Very good question. So, charitable donations and all those kinds of givings and supports and help will continue to be tax deductible. So they will be tax deductible as well from the 1st of January 2026. But obviously you need to keep some kind of records. If there's the evidence of the donation, in terms of maybe even the bank statement or some other acknowledgements by the recipient of your donation, that will support in allowing for tax deductibility for the funds provided.
Sorry, Emeka, let me rephrase that question again. I'm sorry to jump in. So members of my church pay tithes to the church. they give offerings to the church. Are you saying the church should acknowledge
Oh,
that for that to become tax deductible? Is that what you're saying?
okay. So is this on an individual
No,
basis, not companies, right?
some companies say, oh, my company is donating. So your company donates, for example, or the company pays tithes. Should the church acknowledge that contribution so that the company can deduct that, can use as a tax deductible expense? Is
Yes.
that the intent of the law?
Yeah. So what the law has said, both for companies and for individuals, is that they can get a deduction for donations. There is a limit though. For companies, for example, you can't get a deduction more than 10% of your profits. So you cannot be a loss-making company and just keep making donations and expect to get a deduction. But there's no such limit for individuals. But the whole point is, you can get a deduction, but you need to provide evidence for that deduction. I'll just give an example of the kinds of evidences. So I don't know if many churches would want to start, giving acknowledgement, right? But if they do, that's also something to show and to support that they gave or they received, the donation. The individual themselves can provide evidence of the donation, even if it's some kind of evidence of bank transfer, for example, and things like that. Those will be able to justify deduction in their tax returns.
Or check issued.
Yes, something like that.
Thank you. Back to you.
Okay. Thank you so much. Another question for me is, what is the tax rate on company dividend from profit? Is it grade like income, grade like income? Is it grade like income tax?
Yeah, so from dividends, when you receive dividends, okay, the tax rate is a flat 10%. So the company that is paying you the dividend is supposed to, even before the dividend gets to your hand, they will deduct that 10%, okay, and they'll pay over to the government. If it's an individual, so for example, if the person that has the shares is me, someone like me and you, the tax they will pay to the state where we're resident. But if it's a company, maybe we set up a company that is investing in, I don't know, UBA. UBA will pay the tax to the FIRS, or remember, the name will be changed to NRS, Nigeria Revenue Service. But the whole point is not graduated, the tax. It is a flat 10%. And the person that is paying the dividends to us is the one that is even mandated to deduct that tax. So instead of paying us 100 dividends, they'll pay us 90, take 10, pay over to the relevant tax authority.
Okay. And this is also applicable to all kinds of instruments, be it dividend, money market, commercial papers, Eurobonds and all that, right?
Yeah, absolutely. So the only instruments that are exempt from taxes now are federal, from 1st of January, are government bonds. Government bonds, okay? So if it is bonds, I'm using the word bonds deliberately because bonds, implies a long-term instrument. But if it is treasury bills, if it is commercial papers and all those things like that, they'll be taxable. And the entity paying, you remember, like for example, treasury bills, how it works is there'll be a bank that will be helping to issue it. It can be the CBN, it can be another commercial bank. They'll be helping to issue it. So when they are paying you your interest, they'll deduct 10% and they'll pay it. But if it is a government bond, there will be no tax because government bonds remain tax exempt.
Okay, very clear. Very clear.
Hello, can I ask a question, please?
Yes, please go ahead.
All right. Now, even if they come, these securities are tradable.
Yes.
What I mean is that you can invest in a government bond that is supposed to be 5 years, 10 years, or 20 years, because they are securities and they are tradable. You could decide to sell before maturity.
To sell.
Before maturity. So,
understood.
How do you handle the tax management or appropriation if you sell before maturity?
Yeah, interestingly, the way the law says it is income from government bonds. So whether it is income from interest or income because you sold it or income from, so far they look at the underlying instruments and say, look, what is happening is this transaction relates to a government bond, then it need to be tax exempt. So that's how it's expected to work. But if it is any other instrument, a corporate bond, because companies actually, issue bonds as well. There was a time corporate bonds were tax exempt, but those ones, that exemption no longer exists. There is a corporate bond, if it is a treasury bill, if it's any other thing, taxable. But government bond, tax, tax exempt, whether it is interest or whether it is from trading it as well. I hope that's clear.
Very clear. Thank you very much. Very clear.
Yeah, that's very clear. But they dropped a people register all sort of stuff, whether it's limited liability, and some people also register business name. Does this tax that applies to company, limited liability company, also applies to business names?
Okay. I missed the earlier part of your question, but I think I got it at the end. So, no. If you are a business name, you pay taxes like an individual. Because the law says the business name is not different from the individual that has the business. It is only if you are a company that you are treated as a separate legal entity. Okay? So if it is me that has a business, all the profit from a business, they will add it together with my own profits. So for example, if I have a business name, the activities of that business, I'll take the profits and I'll file it as part of my tax return. So if I earn salary, I'll add my salary to the business profits and file it together. If I don't earn salary because it's only the business that I'm running, I'll file the profits of that business as my own taxes. And like I said, for individuals, the tax rate is the first 800,000 is exempt because they were trying to exempt minimum wage. Outside that 800,000, there's an additional exemption, but it is a maximum of 500,000, and that's for rent relief. So that 500,000 is not guaranteed. It is that you provide the details of your landlord and you get up to 500,000. So potentially you can get 1.3, 800,000 automatic, 500,000 contingent on providing landlord details. So that's 1.3. Above that 1.3, every other thing is taxable in line with that table. If you remember the table that I showed you, 15% for 2.2 million, 17% for the next, like that, up to 25%. So that is what a business name will pay. But for a company, if you register a company, that company is not paying any taxes if their revenue is lower than 50 million. And they did it on purpose to make people, because if I'm a business name and my revenue is 45 million, I'll be paying taxes. Remember, as a business name, my exemption is only 800,000 plus 500,000 if I show landlord detail. But if I register as a company and my revenue is 45 million, I won't be paying taxes because for companies, the threshold is from 50 million and above. So those are the two different rates. Business name, 800,000 is exempt, or 1.3 if you present landlord details. And above that, there are different rates up until 25%. Company, you don't pay tax unless you exceed 50 million. And from 50 million and above, the tax rate is 30% flat.
Hello, sir. I'm sorry, I'm jumping in again.
No problem, sir.
What then is the catch? Why that latitude for companies that business names don't enjoy? Why that catch? But that's my first question. No, the second question, sir, is that you talked about government bonds being tax exempt. Government bonds, income on government bonds being tax exempt. Now, what of Nigerians who invested in Ghana bonds, Angola bonds, Euro bonds, and such stuff? They are not Nigerian government. Are those bonds? Are they coupons or interest on those bonds? Are they tax exempt? Those are the two questions I have. Thank you. Why
Very
the
good
latitude?
question.
Why
Very
the
good
latitude that the
question.
companies have? Thank you.
Very good question, sir. But the first one is very easy. They want you to register and become a company. They want you to become formalized because they know that when you become a company, you are no longer in the informal sector. As individuals, business name, you can appear and disappear. You can operate today, tomorrow you're not operating. Nobody knows your details because you're not a separate legal entity. You can just move with the owner. But if you're a company, you're a separate legal entity. CAC has your details. Maybe you also have a bank account in the name of the company. You have all those things. So you have become part of the formal economy. So they want to give that exemption so that many people will formalize. So that when you now grow and become a big company, you can pay taxes. But at least even when you're small, they have your data. So it's all in the bid to formalize the economy, improve what we call financial inclusion, so that they can have visibility on operations in the economy. That's why they're actually giving it to giving that incentive to companies, because companies bring you more in the eye of the government. If we were in an economy like the US, for example, where whether you're an individual or a company, government has your data and all of that, they probably will not introduce this kind of disparity in incentives. Okay. So that's the reason for that. On your second question around government bonds, obviously it has to be Nigerian government bonds. It cannot be foreign government bonds, because the foreign government bonds, first of all, when most times, especially if it's interests, when the bond payment from Ghana is being paid, they've already even deducted the taxes. So you can't take the Ghanaian bond and bring it within the remit of the Nigerian tax framework. It's not going to work. So Nigeria is not going to be able to say, Ghana Tax Authority, don't deduct taxes, or Ghana, issuing houses or banks. You see what I mean? So the exemption is for the players that the Nigerian government can control. So it's going to be Nigerian government bonds.
Thank you very much.
Thank you, sir. Okay. Any more questions, please?
Interesting. I guess a lot of people have questions. I have one more question here. When you do not have the landlord's details, for instance, the facility managed by real estate companies, they collect the rent and issue receipts. What happens? Hello, Mr. Emeka, did you hear that?
Yeah, no, I got it. I got it. Let me put a caveat first of all to say many of these things are new, right? So it's not as if there is a practice experience, that we can say, oh, because of how we've seen it before, this is how we expect. So many of the things that it's to say what we expect is going to happen. However, because I know that the intention is to be able to get the landlord so that they can tax the landlord, there's no way they'll give you incentive if you are providing details that are not the landlord's details. Okay. So they've said that they will issue guidance. So they'll issue circulars, they'll issue public notices and orders. So I'm expecting that they will introduce all these specifics in there. But they've told us that the reason they want to do this is so that they can access the landlords to tax them. So they're not going to give you an exemption if you are providing a receipt or something else and it doesn't have the landlord's details. You see what I mean? So for many of us that file our tax returns, you'll see it. Even when you go to LIRS portal, for example, they will ask you certain questions. Did you pay rent? How much was it? All of that. So what they are expecting to do is to update those questions to say, who is your landlord? What is the address and all of that. So that you put all of that in there and then you attach your receipt. With that, you can now get that 500,000 relief. So the summary of what I'm saying is you should only be eligible for the relief when you provide the details of the landlord, not details of facility manager or details of agents or things like that. So yes, and that's what the law says as well, landlord. I can even project the law in case we want to read it directly from the law.
Wow. Okay, Mr. Emeka, a
Yes, sir.
question from me. As a
Yes.
businessman, I mean, I know that a lot of people they want to either avoid tax or the other way around. They want to maneuver to make sure that they are not paying as high as, on whatever income that is accruing to them. As a businessman that doesn't want to pay so much tax, what are the loopholes that are available within these new tax policies that is coming on board that I can take advantage of? I know that a lot of people might have these kind of questions as well. What loopholes can we take advantage of? I know that some people play around with investing in insurance for their family, for their kids, and all that. Are there opportunities where one can actually minimize the exposure on tax?
Wow. I was expecting, I was hoping that nobody will ask this question. But be that as it may, what they've tried to do is to really cover up a lot of these loopholes. It's so bad that they've even said that if you have any tax planning arrangement, so anything that you do that will make you pay lower taxes, that you should even report it to them. Otherwise, they'll be so if there's something that you've come up with, a bright idea to say, if I do it like this, the tax, if I was supposed to pay 30, I'll now pay 20 or pay 10. That's your tax idea that you should report it so that they can see your idea. It's so bad. So they even want to avoid every loophole. Okay. But I would say, well, there's not a lot of them. The major one is this company versus business name thing, to be honest. If you're a business name and you know that you want to, your annual revenue is not more than 50 million, you can just go and formalize and set up a company. In fact, the head of the Presidential Committee on Fiscal Policy and Tax Reforms has said that they want to increase that 50 million to 100 million. Okay, so maybe that will happen and that will even make it better. So it means that small companies that are generating revenues of less than 100 million may not even pay taxes. So that may be good. So that's one. Two, all those other deductible expenses that used to exist or that currently exist will continue to exist. So if you're an individual, for example, and you pay interest on mortgage, or you pay life assurance premium, or you pay NHF contributions, NHF being National Housing Fund, or you pay voluntary pension, all those kinds of payments, they would remain tax deductible. So they are tax deductible now. They will also continue to be tax deductible in the future. So if you have all those kind of expenses, you can bring all those documentation to show, oh, I actually paid interest on this mortgage I'm managing, or I paid NHF, or I paid premium, life assurance premium, and it will reduce the amount on which you are supposed to calculate your tax on. So that's maybe something. But apart from those two, they've actually really made it difficult to avoid taxes. So unfortunately, that's the situation of things.
Can I ask Mr. Pedro here that
Yes, sir.
because your company is tax exempt because you are less than 50 million does not mean you as a person you are tax exempt.
Very correct. Very correct. So your company can be tax exempt, but you as an individual will be tax paying. How do you get money from a company that you own or that you're a shareholder in? Obviously, if you're a shareholder, the company has to pay you dividend. When a company is paying dividend, they will deduct, they should deduct taxes at 10%. So that's how your income will be taxed. Or sometimes some people work for their businesses. So they're either directors or employees or some other, things like that. In those ones, they'll earn some kind of fees or some kind of salaries. Those, or even if they provide sometimes some owners say they provide technical services or management services to their own businesses. But whatever the case, that income that you earn will be taxable, but at least the company's income is tax exempt. So it kind of helps. And if it's somebody that is reinvesting everything back into the business, then even better for them because they're not even earning anything and they can grow the business.
Okay, thanks. I think there's another question on the chat. It says, if your business is collecting money on behalf of your landlord and remitting them or the service charge that has been paid to your company, would that be taxable? You're collecting money on behalf of, it's not your money, you're collecting money on behalf of the landlord. Would that be taxable? And then somebody says something else and says, will landlords be taxed on their property aside the annual land use charge?
Sorry, just to understand the first question, your business is collecting money on behalf of your landlord.
Yeah, you are like an agent. You collect money and then you
Okay,
repay your
okay, I
landlord.
understand.
So who's
Yeah,
going to
yeah.
pay the tax?
No, obviously that one it has to be the landlord. Your
Okay.
own fee is not the rent. Your fee is
Yes.
what the landlord pays you as your agency fee or commission or whatever. So that's the amount that you'll be taxed on. But of
Okay.
course, you need to provide,
Evidence.
the evidence that this is not your money. It's for somebody that you're just collecting on behalf of. And then the other question around, what was the other question?
Is it will landlords be taxed on their property aside the annual
Absolutely,
land?
absolutely, absolutely. That's the whole idea. So land use charge is a separate kind of tax. Okay. So okay, I don't want to go into tax 101, but there's tax on property. That one is
Yeah.
different. But
Yes.
there's also tax on income.
Yes.
So if you earn rent, that is income. So the landlord should also pay taxes. Okay. Now, for a landlord, even that exemption still applies. Okay, well, in Lagos, this might not be. I was taking a presentation in Enugu and they were very excited about it because you see some landlords, they have a small face me, I face you. Maybe they have 4 rooms. Each room is paying, 200,000 per annum. That's 800,000. Remember, first 800,000 is exempt. So
Yes.
they'll still actually not pay tax. But of course, I know the numbers are higher in Lagos. So the landlord would pay taxes on their rental income, but it doesn't mean that it's just the rent. Of course, the landlord is running a business, so they can take a deduction for their expenses. If I have property, for example, and I earn rental income, but I have to maintain the building, I have to fix the roof, the leaking pipes, I have to pay agents, I'll take the rent income, I'll take the expenses, I'll deduct it, whatever is left, that's actually the profit on which I'm supposed to pay tax on, okay? But
Yeah.
long and short answer to the question of the individual, of that person, apart from property taxes, yes, if there's profit from the rental activity itself, taxes will apply. Subject to those, that 800,000 threshold I mentioned,
Yeah.
and so on and so forth. But it's possible that the landlord may actually own the building through a company. So if the landlord owns the building, like the landlord sets up a property company that owns the building. So the landlord in quote is actually a company. Then we need to check that 50 million threshold.
Yeah.
Because if the rent is not more than 50 million, it's also tax exempt.
Okay. We have 2 or 3 more questions before we close. What advice do you have for a company that has not filed for tax returns since its inception and became inactive for some years? What advice do you have?
That company that has not filed the tax return since inception needs to go and remediate immediately. Okay? The requirement to file tax returns is not whether you're active or not active. It's that you are existing as a company. So far your details are with the CAC, you're a company, you started trading, then one time business went down and you continued and you stopped. That's not, you need to file a tax return because there's a separate penalty for not filing returns. It's separate from not paying taxes. Of course, you won't pay taxes if there's no profit. But the fact that you didn't even file returns, even if it's nil or zero returns, there's a separate penalty. So that company needs to go and comply as soon as possible. Of course, and I need to say this, right? We're in Nigeria. So there's something called the detection risk. So many of these things we're saying is subject to the tax authorities actually detecting. It's possible that you might be lucky and you're not detected, but that's not why we're here. We're here to talk about what happens if everything and all things are equal and you're actually detected, okay? So just wanted to throw that out, yeah.
Okay. How will the government tax people who make money from crypto, Web3, or
Wow.
online jobs?
So two things that are very interesting have happened in that space. The first one is they've said crypto. So maybe I should just take a step back and say, look, even if it is kidnapping that you're doing and you earn income, or you are a tax applies, okay? So nothing in the tax law say tax should apply on legal income. The tax law says tax applies on income, period. So if something is illegal, in quotes, pay your tax first, then we'll go and sort out the other things. Why am I saying this? At some point for crypto, CBN said it wasn't legal tender. You know, they said if you do it, you're doing it on your own risk. So people thought, oh, because it's not legal tender, it shouldn't be taxable. But that's not the case. So it's actually taxable. But on top of that, the new law actually calls it out and specifies it. But they're undergoing training. In fact, I'm very aware of one. Okay, maybe I shouldn't go into details, but they are training themselves to understand how all these things work, you know, how to track, you know, this is how much you bought, this is how much you're selling, and things like that. So if it's a company that makes capital gain, it is 30%. If it's an individual that makes capital gain, it is, you know, at your income tax rate. So sometimes people sell crypto and say, oh, this is something that I do infrequently, so it should be at a lower rate. No, there's nothing like difference in rates again. Everything's now at that uniform rate. So they'll tax crypto. That's the long and short of what I'm saying.
Wow. Okay, so for those of us who are in crypto, we should get ready to be taxed. Okay,
Yes.
one or two more questions before we wrap it up. See, for foreign registered companies, we used to pay tax on your worldwide profit. If a double tax treaty exists, is there now a provision to allow settlement of VAT liabilities with withholding tax? So those are two questions in one. So if you're a foreign company, will you still pay taxes on your worldwide profit if a double tax treaty exists? And number two, is there a provision to allow settlement of certain of VAT liabilities with withholding tax?
This person is a tax person. This person is asking very specific question.
Yes, so
Okay, so
she's
for that first question, they've ignored double tax treaties in a good way. So what they are saying is, if you are supposed to, let me put it simpler. If your foreign income is taxable in Nigeria, you will get a credit for any tax that you pay abroad. So if your foreign income as an individual or a company, if that foreign income is also supposed to be taxed in Nigeria, they will allow you to reduce that tax that you're supposed to pay in Nigeria with the tax that you've paid abroad. And it doesn't matter that abroad is a treaty country or not. This is what I mean. So it's actually a good thing.
yeah.
Before, you would only be able to get that tax credit if you pay the tax in a treaty country. Now, they said you get the tax credit from regardless of whether from any country or in respect of any foreign country that you pay the taxes. So they are not looking at treaty countries anymore, but in a good way. So if you're paying taxes in Nigeria and you suffer taxes abroad, you can reduce your tax payment in Nigeria with the foreign taxes. So that's what they've done. That's one. Two, can you settle
VAT.
VAT with withholding
Yeah.
tax? No,
Yes.
you cannot settle VAT with
Wow.
withholding tax, but you can settle withholding tax with VAT. And I don't know whether I want to go into all the details. So there's something they've done. It's called impute VAT. So when you buy things and you
Yes.
pay VAT, that VAT that you paid, you can recover it from the VAT that you collect when you sell. So let's say I am an accountant and I had to pay for NEPA bill, I had to pay for security, I had to pay for cleaning services. Those people, as I was paying them, they were charging me VAT. That VAT that they charged me, I'll hold it. When I provide my accounting services and I charge my customers VAT, I'll charge them the VAT. Sorry, that VAT that I paid, I'll pay it to the government, but I'll record it somewhere. When I charge my customers VAT and they pay me, instead of me to pay everything to the government, I will deduct the amount that I paid on my costs from the amount that I collect from my customers, and I'll only pay the net.
Okay.
So they've done that, and that's a perfect change. Now, they've said if the amount that you paid on your costs is more than the amount that you collected from your customers, that excess, you can use it to set off against any other of your tax obligation. So maybe it's CIT, maybe it's withholding tax and the rest. So you can use VAT to set off against withholding tax, income tax, and the rest. So that's why I was explaining that.
Okay.
So,
Thank you very much.
yeah,
So
that's
one
the
or two
response.
final question. Number one, when should you pay your taxes to avoid penalties? And number two, what's the procedure for collecting these taxes from individuals, like the business name owner, for instance? Will it be monthly or will it be annually?
Good. So procedure, if you're a company, just put together. So there are different kinds of taxes, but I'll focus on the major tax, which is companies income tax. Please put together your financial statements, okay? And do your tax computation to arrive at your profits and the tax that you're supposed to pay. And you're supposed to file it by 6 months after your year end. So if your year end is in December, you're supposed to pay and file by June in the following year as a company. If you are an individual, if you're an employee, your employer would have been deducting monthly, but by March of the following year, you're supposed to file your return. So even though your employer has been deducting your tax monthly, maybe you're also selling hair, or maybe you also sold land, or maybe you have property, you got rent. You bring everything together, both your salary that your employer has been deducting taxes from and all these other things, you put it together by March of the following year, you compute it, and then you say, my employer has actually been deducting. You remove that one that your employer has deducted, and then you file everything by March. So companies by June following year, individuals by March of the following year. After this, you're fine with your income tax obligations. From the other year, the tax authorities can now come and do audits to now check whether you actually filed your returns, and that's where there might be additional exposures.
Okay, so you mean our side hustle is also taxable? All the side hustle is taxable?
It is. The problem with Nigeria is that there is no information, but it is actually taxable. That's why some people choose to live in Nigeria, because governments maybe cannot say all those things that they can. Like when you go abroad now, there are certain stores that you go to, they'll say, do you want to pay with card? If you're paying with card, is a higher price. If you're
Yes.
paying with cash, is a lower price, because somehow they'll be able to remove that from the visibility of government. So the truth is, every activity side hustle, main hustle is supposed to be taxable. Yes.
Okay. So there are two more questions on the chat, and that will be our final two questions. Say, what about retirees? Will their pensions be taxed? And there's someone saying for a company below
No.
50 million.
No.
No. Okay. So pension is not taxable. Okay.
Correct. Pensions not taxable.
Okay. All the
Correct.
pensioners in the house, congratulations. So your pension, but your other income is taxable. If you're a pensioner,
Yes,
but you are
correct.
doing
Correct. If the retirees carry on business and
yes.
earn other income, then it's taxable.
Okay, but
Yeah.
pension income is not taxable.
Correct. If the retirees receive, subsistence support from their children abroad, all those things is not taxable because it's not income that they earned from, business. Okay. But if the retirees go and sell land or go and, they have a shop or they have, that one is supposed to be taxable.
Okay. So final question, a company that is earning below 50 million turnover, will they still be liable to pay VAT?
Yes, they'll be liable to pay VAT. They will not be liable to charge VAT. So there's a small difference. So of course, even me and you, we go to restaurants, they will charge us VAT and we'll pay. So those businesses, so if they engage vendors, the vendors will issue them invoices, charge them VAT, and they will pay. So they are required to pay VAT when they are charged. But they themselves cannot charge VAT on their own sales.
Okay, great. Okay, I think this has been very useful. I know we can drag on and on, but we don't want to exceed 7:30. Emeka, if we have more questions, where can we contact you? Where can we meet you?
Pastor P.
Yes, sir. Yes.
Yeah,
okay. I didn't know you were back. Go ahead.
Yeah, I've been when you were asking all the questions. Okay. Yeah, I just want to. Okay, this will be like a closing remark, right? We find it difficult to justify why people should pay tax in Nigeria. I think that is the biggest pain point for Nigerians. And I don't want it to come from pulpiteers. I don't want it to come from pastors encouraging members to pay tithe because of moral grounds. But again, or spiritual grounds. But again, there is a need, there is a reason why we must pay tax. I want it to come from you as a person. Why should Nigerians pay tax? I know Nigerians have excuses. Government are corrupt. They don't use our monies. They don't use it. But be that as it may, from you as a tax expert, why should Nigerians pay tax? Maybe
wow.
I'd like you to close with that.
Yeah, it's one of the most interesting, at the same time difficult questions I get asked all the time. The only thing I would say is two wrongs don't make it right. So for the most part, you see that people say they won't pay taxes because the tax money is not used effectively. But at the end of the day, how then do we demand accountability if we don't fulfill our part, or our role? So we need to pay the taxes, fulfill our role, then we can then say, okay, leadership, you're not doing ABC with the taxes, so at least we would have done our own role as the citizenry, and then we can demand accountability. In fact, when you don't pay the taxes, it's tough for you to justify accountability. In fact, when you don't pay taxes, you're saying anything goes, I didn't contribute, I don't have the right to ask for it. You shouldn't even be able to justify demanding for accountability. So it's not as if even me as a tax consultant, I enjoy paying taxes, right? But I encourage that we need to, first of all, to be able to demand accountability, fulfill our own parts of the bargain, and then we can hold these guys to book, and ask for what is duly ours. So we need to start from, doing our own part and then being able to demand accountability. So that's all I'll say.
Okay, and that's an interesting answer. Though somebody asked me a question, listening to this, he said, "How do we hold government accountable?" Meaning, how do we sue the government? How do I go about it?
You sue the government. Well, Anyway, I don't know the kind of, there's been interesting. Look, the world is no longer how it was before. A tax bill in Kenya was taken apart by the young people of Kenya. They actually went to protest. This is not protesting, social media. These guys read it, understood it, and came out. And you ask the normal young person in Kenya, why are you on the streets? And they'll tell you, we do not like A, we do not like B, we do not like C. And they were correct. So that's one of the things that we actually need to figure out how to encourage our young people to do. It's not, just by hearsay. You need to also have, and maybe I guess is one of the good things as part of why we're here. But when you understand these things, and then you can protest. Protest is legal, right? You can protest. Of course, they always say by election. We're in Nigeria, so we know how elections go, but it's one of those things. But you can impeach your leadership, you can do all those things. But again, we need to know first as a good starting point, and then obviously, hopefully the other things will be things that we'll figure out as we go.
Thank you very much, Mr. Emeka. Thank you so much. It was an interesting insight from you. And we pray that God will continue to increase you in wisdom and continue to uplift you in your area of expertise. Thank you so much for enlightening us today.
Thank you.
Mr. Fan, you still here? We didn't hear you. Okay, so maybe now we'll turn over to Pastor Jackson for closing remarks, announcement, and prayers.
Yeah.
Thank you so much. A very big thank you to everyone that has participated. To our major facilitator, we say big thank you to you. This program was put together by FOTA, Aja Kingsmen, the Men's Fellowship of the Church Foundation of Great Assembly, Aja. Our church is just right beside Lagos Business School, and we meet every Sunday and Tuesday, Sunday 9 a.m., Tuesday 6 p.m. If you live and walk around that axis, our doors are open, big enough to accommodate you, small enough to identify with you. We welcome you to join us, and the good Lord will bless you richly in the name of Jesus. I'd like us to just say a word of prayer. Father, we thank you for this wonderful opportunity. We ask, Lord, that you grant us wisdom on how to take good advantage of what we have learned so that it will profit us and our businesses in the name of Jesus. For the person that you have used tonight, we ask, Lord, that you continue to guide him, lead him, and direct him, that he will not fall into any error, into any complications, in the name of Jesus. Thank you, Ancient of Days, for in Jesus' mighty name we have prayed.
Amen. God bless you. Enjoy your weekend.
Thank you, everybody.
God
bless you.
Take care, guys.
Thank you,
Bye.
everyone.
Thank you. Thank you.
Emeka,
Bye-bye.
thanks so much. I'm grateful.
Bless you all.
Thank you.
Bless
Thank you.
you.
Bye-bye.
Take care, guys. Bye.
Thanks, Emeka.
Bye.